All right, hey guys, just a quick check of my microphone. Can you guys hear me? If you are able to hear me, can you please raise your hands or just type down in the chat below if you can hear me? Okay, I've enabled the chat button. Can you try to type down in the chat box below to see if I'm able to see the chat? Right, okay, good. That's great. Let me just share my screen. Give me a second. All right. Can you guys see my screen? Okay, great. Let's just begin. Okay, hey everyone, welcome to another live trading session brought to you by IronFX. I hope this week has been a great week for you guys. And for today's live training session, let us go through a few key fundamental news and potential setups for the rest of the week ahead. All right. Okay, I'm your host for today. My name is Woon Hong and I'm an investment analyst at Everest Fortune Group. Okay, so for the agenda for today, I'll be covering the key economic news for this week, which will be USD CPI, which is happening on the 10th of August, which is today, in a few hours' time. And next will also be USD unemployment claims, which will also be happening today in a few hours' time, same time as the USD CPI news. And thirdly, we have the GBP GDP, which will be happening tomorrow. And for the USD PPI, which also will be happening tomorrow. So how will this news affect the market? I'll be going to review guys later on, as well as technical analysis of the current market and key levels that we should watch out for, and any potential setups that we can look out for the rest of the week ahead. Okay, so let's just go through this. Okay, so for the news for today, we have the USD CPI and USD unemployment claims. So just bear with me as I go through with you guys the explanation of this news and why should traders actually care about the importance of this news, right? Okay, so if we take a look at USD CPI, for the measures, it is the change in the price of goods and services purchased by consumers. And if the actual data is actually greater than the forecast, it is good for the currency. So next will be, why do traders care? Basically, consumer prices account for majority of overall inflation, and this first sentence is what you should look out for. And you should keep in mind that CPI news, PPI news, and unemployment news are the most important news for USD currency. So it will cause a lot of volatility in the market. So this is what you should watch out for. So later on at 12:30 p.m. GMT, which will be happening in about 2.5 hours time. This is where you should watch out for the markets for USD pairs, such as gold, GBP USD, Euro USD, and USD JPY. So the markets will be pretty volatile during this period. Yep. So for example, let me just show you guys what I mean by volatility in the market. So you can see on 12th July, if we zoom into this news, at 12:30 p.m. USD CPI news, right? So if we go back to okay, so DXY, let's take a look at the 12 July, 12:30 p.m. So it should be around this area. Okay, so let me just mark it out. 12:30 p.m. Okay, so during this period, you can see that DXY is actually moving quite a bit. Let me just go to the news. Okay, so the actual data is 0.2%, which is lesser than the forecast of 0.3%. So this means that if the actual data is lesser than the forecasted data, means that DXY will actually decrease because of the negative data. So let's just take a look at. Okay, so looking here, we can see that here is the point in time. Oh yes, can you also go Euro, USD, and crude oil? Yeah. Later on, I'll be going through the different pairs that I have for you guys. You can see over here in my watch list. These few pairs are the ones that I have actually prepared for you guys, especially for gold and oil. Okay, so this is just a quick explanation of the news. So this is why you should watch out for. This is why you should watch out for CPI news, because right after that, price actually went down all the way and actually broke this consolidation phase. So CPI news is actually very important in the sense that you should trade only after the news, because for amateur traders, you may not know how to read the data that was being released, and this could cause you to be confused on whether you should buy or sell for the different pairs. So basically, if DXY goes up, right, then GBP pairs, GBP USD, Euro USD, anything that has XXX USD behind, right, will actually go in the opposite direction of DXY. So if DXY goes up, gold goes down, DXY goes down, gold goes up. Okay, that's just the main gist of this news. Okay, so next, all right. So for this news, we have pretty much covered it. So for unemployment claims, basically, if for this is a little bit different. So if the actual data is less than the forecast, it is good for the currency, because basically, if the data is less than the forecasted data, means there are lesser people being unemployed. So this is good for the currency. Okay, I'll quickly run through the news because there are multiple pairs to go through. So if you have any questions based on all these news, do just ask me in the question box below and I'll get to them in a bit after going through the different pairs. All right. Okay, so for August 11, which is tomorrow, GBP GDP. So basically for this is the change in the total value of all goods and services produced by the economy. So if the actual data is greater than the forecasted data, it is good for the currency. Okay, so just remember, if the actual data is better than the forecasted data, means that GBP currency will go up. So GBP USD, GBP JPY, GBP AUD will all rise in price. Okay. So the last one would be USD PPI news. So let's just zoom into it. So if the change in the price of finished goods and services sold by producers, so it's similar to CPI news. And if the actual is greater than the forecast, it is good for the currency. So previously, you can see that the actual data is actually lower than the forecasted data for many months ahead. And there are only a couple of times whereby the actual is better than the forecasted data. So this shows that there may be a chance that the actual data could be lesser than the forecasted data as well for this coming USD PPI news. So it may actually change, it may actually stay at 0.1% or become negative. Okay, so just watch out for that. But you should also stay tuned to the different news, and you can go to CNBC, Forex news. Okay, so this is where you can see all the currency news and headlines, and also watch the live either on CNBC or YouTube. So if you decide to trade news, which I recommend that you shouldn't, yeah, those are the websites that there is the website that you can take a look at. Okay, so without further ado, let's just dive right into the different charts. So like I mentioned previously, let's just take a look at DXY for now. So DXY is really simple. Basically now, let's just let's just use this brush tool. Okay, so basically DXY, we can see that price previously was at this high, and when price reached this area, it couldn't break this high, but instead wicked it out. Let me just, okay, so you can see, so this area is where price actually touched it, right? If I draw it at the body of the candle, price actually touched this and went all the way down. So this shows that this was a strong area for DXY, and price could actually make high lows. So because this is the high, this was the high, higher lows, higher lows. All right, so we can expect for DXY to actually come down to this first support area and then bounce up to this area right here, this area, and then to make another higher low. Okay, so we have marked out our first resistance area, which is here, and our first support area, which is right here. And we'll always put your support and resistance lines usually on the body of the candle instead of the wick, because if you put it at the wick here, you are not able to touch all these multiple points. You can see you have touched this multiple times, but if you put it at the wick, right, it doesn't really make sense. So try to put it at the body where there are wicks touching to. So this is more effective for price to see where price could go. Okay, so if we look on the daily time frame, we can also see that this looks like a double top, right? So first top, second top. Okay, so we can expect for price to actually make this movement. Let me just get rid of this. For price to come here and do this, right? Because this is essentially, this support area is essentially the neckline of this double top. So we are looking for price to actually break this neckline and then retest and come down. So it may be a bearish outlook for DXY until we touch the first support. So GBP USD, Euro USD, and pairs like okay, so this is what we are looking at. So just keep in mind, XXX USD pairs will go up when DXY go down. Okay, so just keep in mind of that. Okay, so next we'll go through okay, so Juha will go through crude oil and gold towards the end. So because we'll leave the best for last, right? So let me just go through these different pairs and see because they may actually have potential for you guys to trade for today and tomorrow. Yeah, so okay. Basically we are looking at GBP USD, but GBP USD there may be a chance whereby let me just go through this with you guys. So how we define our sell entry right here, okay, is because of this 78.6% retracement level, which 78.6% feeble projection level, which we have drawn from this low, this high, and this low, right? Because for feeble projections, always remember that there are 3 points, right? So we can see that price has went up, came down, and we are projecting it for it to go all the way back up here to be in line with the multi-swing high resistance, okay, before dropping down. As well as we have a 61.8% feeble retracement level. So 61.8% retracement level together with this 78% feeble projection level, this shows that there's feeble confluence in this area right here, and for price to make a drop down to this area where it's a multi-swing low support level. Okay, so but there's a slight possibility that price may actually sorry, give me a sec, may actually break this multi-swing high resistance, because this, you can see that multiple times there are at least 3 times where price has touched this area and rejected off it, right? So there may be a slight chance that price may break through this resistance level and actually go to this area whereby there's a 161.8% Fibo extension level, okay? So if price, so you have to watch really closely, go to the lower time frames. So we'll drop to maybe the 1 hour time frame or even 15 minutes, right? So because your entries needs to be within the 1 hour or 15-minute time frame, because you want the candlestick to show up here and then for the body to close below this area, then it's a confirmed sell, right? If the body, so let me just give you an example. If the body is right here like this, right? And it closed above this area and exceeded the 61.8% retracement level, then you will know that this may not be a potential sell entry, but you should only sell right up to this point, right? But if the body actually closed below here, then this is a valid sell entry. This is not a valid sell entry. So just keep in mind. So what you're looking for would be rejection candles along this area. Let me just okay, so rejection candles along this area is fine, but and then if there's a bearish engulfing, so whole bearish engulfing, so let me just show you guys an example. Yeah, so if there's a bearish engulfing, so if you see the previous example, right, price has actually closed above, but don't be afraid because price actually came down, closed below multiple times. You can see wicked it out right here, wicked it out right here, wicked it out right here, and then this should be the point where you enter, right? So if price does the same, then you can confirm that it's a sell entry. Okay, but if not, if price actually close above this area, so you will actually look for a sell around this point here. Okay, let's just go back to the 4-hour time frame. Okay, so the idea is to have a okay, so if I were to take a shot right here, just change this. My stop loss will be right above this overlap resistance area, right? Then my take for profit will be right here, 2.64 risk to reward ratio. So the ideal risk to reward ratio is always 1:2 or 1:3. And since we're on the high time frame, it'll be good to have 1:2, and then you can close after. Okay, but if price were to exceed this resistance, right, then you can look for a sell right here, and then your stops can be over here. Okay, so once it's maybe about 1:1, which is right here, then you can shift your stop loss to break even. Okay, so yeah, that's for GBP USD. Okay, so let me just go through the next pair, which is very simple, USD CHF. So for USD CHF, you can see that price is actually ranging during this area, looking for a breakout to the upside. Okay, so what I'm essentially looking at would be price doing this, which is one of the patterns. I believe is the pennant. But yeah, let me just see if it's valid. Okay, so if you guys didn't know what a pennant is, okay, let me just show you guys an example. Okay, so it looks just like this, right? Bullish pennant. Let me show you an example. This is the handle, right? And then price is making high lows and then equal highs. Okay, so this is valid, and then price is doing this as well. So if you just copy it in a sense, right, you can see that bullish pennant is actually happening right here. Okay, because we can see there's a reason why price is consolidating during this period, shows that there may be a breakout anytime soon. Okay, so since we're looking for a buy during this area, right, we can see that price is actually respecting this trend line multiple times already, and we can see that this level is a good area for you to buy. because there's a 38.2% Fibo retracement level right here. Okay, so this support area is where you should look for a buy to the upside, right? Then your stop loss will be slightly below the 50% Fibo retracement level. So this will give you a, if you take a long position right here, this will give you a very nice, slightly above 1:1 ratio. Okay. Yep. So yeah, just a reminder, if you guys have any questions through the pairs that I when I'm going through the different pairs, just type it in the chat box below and I'll get to them. Okay. So next will be USD JPY. Okay, so for USD JPY, we can see that there is a very nice sell entry opportunity right here, because price has actually went from this area, this low right here, all the way to this high. So we can see that at this point, if you go on the daily, let me just, okay, we can see that price, is this the high right here, right? We can see that price could actually make a very nice double top right here. Okay, for it to reverse down all the way back down. Okay, but in order for us to confirm our sell entry, what we need to look at is the stop loss and take profit levels to see if it's actually worth taking a sell trade right here. Okay, so if we were to take a sell trade right here, our stops will be actually pretty big because it's 134 pips. But for take profit levels is a potential swing trade. But I wouldn't suggest to hold all the way down to this area because it may take maybe 2 or 3 weeks for it to actually reach that area. All right, so that's it. Okay, so for this area, let me just explain to you guys why we chose this area as our sell entry. Because we see that price has actually reached this area and started to reject off it, right? And for this, if we zoom in, we can see that there's a overlap resistance area right here. Price has rejected this area multiple times and then finally broke through it, right? So if support has been broken through, what comes next? Resistance, right? Just a tip for you guys. This is what I've been telling the other people in the webinar. If there's a break, support becomes resistance. Resistance becomes support. So just 2 terms that you need to remember. This is how I usually practice. Try to keep it simple and for you guys to remember this. So SBR and RBS. So these 2 terms, you may actually get used to it. So support, break support, become resistance, right? So you can see this area, it has been broken through and now it's a resistance. So we can see that if we go down to the lower time frame, we can see price is actually starting to go back up to this area whereby it's a potential sell entry, but don't rush into it. I know that maybe sometimes you may feel like you're losing out, like FOMO, but you can still take a sell opportunity right here and be patient and wait for price to reach here. If you miss it, it's okay. Just look for another opportunity. But I would say this is a potential swing trade. And why we place our stop loss here is because of this 61.8 projection level, which we have drawn from this low to this high to this low, right? You can see price went up here, came down, and what's next? Price is slowly going back all the way up here. Okay, and price has already broken through this high over here. So we can see that price could potentially go even further, but it may actually stop right here and go down. So that's why we have a potential sell entry right here. Okay, so as well as the 161.8% Fibo extension level. Okay, which is this high right here and this low. So you draw a fib from this high to this low, and then we can see there's a 161.8% together with the 61.8% Fibo projection level. So this shows that there is Fibo confluence during this area, and this is where we should place our stop loss slightly above this area because we don't want to get stop hunted, right? Okay, so our take profit levels, we don't want to be too greedy to aim all the way down to this low right here. Although it's a very nice multi-swing low and it looks good to be taken out, but price should actually react around this area where there's overlap support area. Okay, so this is what you should look out for USD JPY. All right, so let's just see the other pairs. So for Euro USD, okay, so for Euro USD, firstly, we have a very nice major descending trend line. Okay, this shows that but it has already been broken out through this price right here. I think earlier this morning, right? So what we're looking at potentially is for a retest, because once trend lines, imagine this, right? If you see a trend line, price has been doing this all the way, it broke through. What would price need to do? Come down, retest this area, right? I'm pretty sure you guys have seen this many of times, whereby price has actually retest the trend lines after breaking through. So this is potentially something you should keep in mind, that if a trend line always gets if price actually broke out of a trend line, then price would most likely retest the trend line, usually around this area, right? Okay, so for our sell entry, why we have chosen this area is because we have a 78.6% feeble projection level from this low, this high, and this low. All right, you can see that we lose a lot of Fibonacci projection levels because we can predict where price may go. So usually for projection levels, so if price went all the way up here, came down, what's next? Go up again, right? So you just have to keep that in mind. Okay, then we have a 50% Fibo retracement level also at this area. Okay, so with this Fibo retracement level and this 78.6% Fibo projection level, this shows that there's Fibonacci confluence around this area, right? So we are waiting for price to come here, be in line with this multi-swing high resistance level, and for us to take a sell down to this overlap support area. Usually for the target, you wouldn't have to target so low, but usually around this area whereby there could be a chance where price does this. So price come here, come down, and go back up, right? Before maybe coming down. So this is something that you can watch out for because it's a pullback support area for here. And it's near the trend line that has been broken through. So price may actually react based off this area. Yeah, so we are confident for this Euro USD trade. And for our stop loss, we have placed it slightly above the negative 27.2% Fibo expansion level, because we don't want price to actually touch and go, right? So because sometimes price may actually fluctuate here and then come back down, right? So this is something that we are looking at for Euro USD. All right, so let's move on to AUD USD. Okay. So, oh yeah, at any point of time, if you guys want me to go back to any pairs just to take a look at it again and just to note down where we are looking at, just remember, just let me know and I'll go back to the pairs, okay? All right, so for AUD USD, there's a potential sell entry, but I'm not too confident for AUD USD because price may actually do this, and then during this area, it will actually go down, because previously where price is making lower lows and lower highs, right? You can see, let's say this is the lower high, lower high, lower lows, lower lows. You can see lower high, right? Lower high. But what did come next would be a higher low. So this is not sorry. This is yeah, higher low, higher low. Okay, so this is not something that I'm looking at currently. So this is not one of the priorities. But instead, let me just explain to you guys why this may actually be a potential trade, but you may actually risk lesser for this AUD USD trade, because we have a 61.8% Fibo projection level from this low this high and this low, right? So same thing is, if you guys notice, right, it's like a zigzag, whereby imagine this low go up to this high right here, then what's next, come down to maybe this low and then this high, right? So it's always like a zigzag. So you just have to remember this pattern, okay? And then for we also have a 61.8% Fibo retracement level in line with the 61.8% Fibo projection level. So this shows that there is Fibonacci confluence, right? And we can see price could potentially make a double top right here. Let me just take this out. Okay, so price could actually potentially make a double top right here if it doesn't break this high. So we're looking for a sell entry right here if it doesn't break this high, okay? So if you were to take a sell right here, and then our stops is roughly about 50 pips, and our take profit is also about 50 pips. Okay, like remember what I said previously, to always put your take profit levels before the major swing lows. So for major swing lows, always put before, and for major swing highs, you can put before too right here. Okay. So this is what we're looking at. So for this AUD USD trade, you can maybe risk slightly lesser because this is a trade that may actually go against you, maybe to this point, and then it starts reversing down. So yeah, that's for AUD USD. Okay, so for NZD USD, let's just take a look at this pair. Okay, so for NZD USD, we can also see a major descending trend line right here. As we can see, price has tapped it multiple times. 1 time, 2 times, 3 times, right? Okay. Then we can see that price, with this, we can also see that price is staying below the Ichimoku cloud. So you can see price has stayed very nicely below these areas and has not exceeded the cloud yet, right? So we can see that price is still in a bearish momentum, and we wouldn't want to go against the trend because for beginner traders, we should always follow the trend instead of going against the trend, right? So just remember, the trend is always your best friend. So just follow the trend and you will not lose money in the long run, okay? So basically, we have a very nice descending trend line over here, and we have a sell entry opportunity over here because of this 61.8% Fibo retracement level. So this is and we have a pullback resistance level right here. Okay, so we can see this was once a support break, right, becomes resistance, correct? And then we are looking for a resistance, means this is now a resistance zone, and we are looking for price to actually dip down to this support level over here. Okay, so why we chose this support level over here for our take profit level? Because there's a major swing low right here. Major swing low because price has went up all the way here of about 200 pips, right? So this is a major swing low and it hasn't been tapped before. Maybe once, but the here it hasn't been tapped before, right? So price could potentially fall back down to this area. Maybe could even take out this low right here. Okay, so this could just be a pullback for price to correct itself, and then price could potentially come all the way down to this level right here. Okay, so that's where we should put our take profit at. And also, to complement this idea, basically if price reach this area, since it's below the descending major descending trend line as well as the bearish Ichimoku cloud, right? So this shows bearish momentum, so we can confirm that this could be a sell opportunity, right? Okay, so that's for NZD USD. And for AUD USD and NZD USD, you can see that price is actually pretty works pretty the same. They move pretty similarly in a sense that you can see under the bearish Ichimoku cloud, right? And then we are looking for a sell. Okay, for NZD/USD, under the bearish Ichimoku cloud, and we're looking for a sell. So if these two are actually in line with each other, you can confirm that this could be a perfect sell opportunity. Okay. So let's move on to AUD/CAD. Okay, so for AUD/CAD, it's actually pretty simple. Basically, we have a very nice sell entry right here with multiple swing high resistance level, and it's below the it has actually come between the in between the bearish Ichimoku cloud. So this shows that it has still enough bearish momentum for price to push itself all the way back down here. Okay, but there's a slight possibility that price may actually take out these highs and come all the way back to this area right here, because you can see that price has came up, touch it once, touch it twice. Usually when price has touched it twice, right, usually it wouldn't stay there much longer and break above. Okay, so this is something that you guys can take note of. So we can also see, let me just draw it out for you guys. You can see a small little trend line right here. So okay, this could show that the market structure is actually shifting, and we're waiting for price to break out of this area right here. So price could potentially do this and come all the way up here. So this AUD/CAD trade, like the AUD/USD trade, I may not be too confident about this, but just keep in mind, price may actually go in our favor. So maybe for this trade, you can risk 0.5% of your account. For trades that I'm more confident of, usually I'll risk maybe 1 to maximum 2% of my account. For example, let's see, for example, the Euro/USD or USD/JPY, like I'm more confident of these trades. So these are trades that I will actually risk slightly more than normal because of the confidence that I have for those trades. Okay. So for AUD/CAD, basically we have the 61.8% Fibo projection level from this high, this low, and this high, right? So if this is the opposite, so basically if this high, you draw to this low, right? Then back to this high, what's next? Remember the zigzag pattern? So price will actually come down here, right? So this is what we're looking at here, here, and then here. Okay, so this is something that we are watching out for. And we also have a negative 27.2% expansion level right here at our stop loss, because this area is a nice pullback resistance level, right? Because price was once a support, broke through, came back up, acted as a resistance. So what's next? Resistance, right? So this is very simple. So just keep in mind the SBR and RBS, support becomes resistance, resistance becomes a support. Okay, so those are tips that I can just give you guys. And yeah, so this is what we have for AUD/CAD. Okay, let me just okay, so for UCAD, okay, so let me just mark it out for you guys, maybe my thought process on how I identify key levels. So these areas could be key levels whereby, remember, it was once a resistance, right? Resistance, resistance. Okay, break, and now support, right? Because resistance, RBS, resistance becomes support. Okay, so we have a potential, let's say we have a potential sell entry. Potential buy entry right here. Okay, so where should our stops be? Our stops should be below this swing low right here. Okay, oh wait, oops. Stop loss. Okay, and then where should our take for profit be? Our take profit should be this area. Usually, remember, take profit shouldn't be at this swing high, right? It should be at the body of the candle. Okay, so for USD CAD, this is what I'm looking at. So in order for us, so basically I'll mark out the key levels first and then decide whether, okay, should this be a sell, should this be a buy, right? And we are looking at price staying above the bullish Ichimoku cloud. Okay, so this could just be a pullback for price to even go up even further. Okay, so let's just draw a, let's see if we can find any key levels. Okay, so we can't really find a nice key level right here. Let's see. Okay, so okay, you can see if I draw a fib from this low to this high, right? We can see there's a 61.8% Fibo retracement level right here at our buy entry. Okay, so this is valid in the sense that you can see price has actually wicked it once and may actually come back down. If we go to the lower time frame, could actually make a double bottom, because you see double bottom and go up. So usually you can use the 15-minute time frame for your entries, and then for your H1 and H4 is for POIs, means points of interest, and as well as your key levels, because the higher time frame key levels are always king, right? It's always price will react much better with higher time frame key levels rather than lower time frame key levels. So let's just take a look at this. Okay, so I don't think there's a projection right here because we don't have multiple points. So let's say we want to draw from this low to this high, but we don't have a low yet, right? So we can't really gauge. Okay, so let me try low, high, low. Let's see if it's actually at yeah, you can see price would most probably come, you can see this 61.8% Fibo projection level, right? Is right below this wick over here. So price, there's a possibility price may actually come up from here and take out this high right here. However, if we want to have better take profit, have a chance to take profit, right? We should put it at the body of the candle. I mean, if from the body of the candle to the wick is maybe like 15 pips, yeah, it's about 15 pips. So you wouldn't want price to reverse against you just for that 15 pips, right? Okay. So if you were to take a long trade, right here, stop loss here, 1:1.5. Okay. Let me see if there's a trend line. Okay, there's not really a trend line over here. Okay, I think that's about, let me see. 78 should be around this area, right? Okay, it's higher. Yeah, there's a possibility that price may actually come up all the way from here to right below this 78.6% Fibo retracement level, because this level has not been taken out. And if you guys know about ICT, this imbalance, right, is price will actually tend to take out this imbalance right here. You can see price actually went up and maybe half of it, right? And this area hasn't been taken out yet. So there's a possibility whereby this area, let me just draw it out for you guys. Okay, this area could be reached maybe next week. So we can predict that this is just a pullback and then for price to come up here. So for USD CAD, I'm actually quite confident that price will actually pull back here and for price to come up here. Okay, sorry, it's a little bit messy because of all the thought process and stuff. Yeah. Let me just take out of this. Okay, so far, does anyone have any questions based on any of the pairs? No questions? Okay, that's great. Yeah, okay, so let's just see. Okay, is it understandable? Like, because I'm afraid sometimes I may be going a little bit too fast. So yeah, just please tell me to slow down if I'm actually speaking too fast. So this is a good speed, yeah, because I want to cover as many pairs as I can. So just bear with me, okay? Okay, so I don't know if you guys trade indices, but okay, so for US 500, right, which is also S&P 500, I'm actually looking at this area whereby this is a support area that I'm looking at. And let me just draw it out. Okay. All right, it should be 100% Fibo projection. Yeah, so this is where I am looking for sell. Okay, for sell entry, my take profit would most likely be this area right here. Okay, remember body, very nice multi-swing low support area right here. Okay, Fibo 100% projection for price to actually come out to this sell entry point and for us to take a sell, right? Because you can see we have a bearish Ichimoku cloud right here and price is staying below this area, so it's a good sell opportunity. But maybe you guys don't really trade indices, so I'm not too sure if you guys will actually take this trade. But this is what I'm looking at, and surprisingly, I actually told my mom to actually sell here. And at this point, I remember I told her that US 500 will come up to this level and for her to sell in this area. Yep, so okay, so for this area would be my stop loss, okay? Because of, you can see, price has tapped it multiple times, right? It's respecting this area until it broke through and support break becomes resistance, right? You can see it wicked out here twice, okay? So SBR and RBS are terms that you can actually get used to, and it works very well. So just keep in mind, like RBS, SBR, RBS, SBR. Just tell yourselves that every time you trade, and then you can see things much clearer and draw your support and resistance lines a lot better. So yeah, so this will be a very nice trade. There's no retracement levels if I remember correctly, but let me see if I can draw a, let's see, all fibs. Okay, maybe this area, right, is your take profit target, but you wouldn't really have to highlight that because price has already wicked it multiple times, and then price could most likely reject off this body candle here. So just put this as a take profit target. So this could be your sell entry. Okay, so this is what I'm looking at for US 500. All right. Okay, so for, let's just go through gold and oil, and then we'll call it a day. Okay, so for gold, right, we can see, let me just, okay, so previously I've drawn out the let me just go through the thought process. Okay, so what I'm looking at, basically you can see that gold has been making a very bearish movement, and then we can see that price is actually pulling back to this area. That's why our bias is a sell. So always figure out your bias first, and then let me just put it out there. I want to sell. I'm going to sell gold, right? So this will be our sell entry right here, And then we have projected, we have a 100% Fibonacci projection right here, because this low from here, this low, this high, this low, so zigzag, right? Price will most probably come up to here. So this is the first scenario, okay? So price could either react to pullback resistance at 32% Fibo retracement level, or overlap support at 50% Fibonacci retracement level. So in my opinion, it's highly likely to react at the first one, which is the 38.2% Fibo retracement level, due to the Fibo projection level. So this area is whereby there will be Fibonacci confluence, okay? So even though there's a slight gap, maybe this area, am I a little bit too far? Okay. So there may be a slight gap between the 100% Fibonacci projection level and the 38.2% Fibonacci retracement level, but our bias is still a sell, right? So you can potentially sell here. Let me just show you the first scenario. Sell here, stops here, 78 pips, target here. Okay, 1:3. Okay, but if price were to close above this area, right? Close above this area, then the next sell entry that you're looking at would be this area, because there's a 50% Fibo retracement level and a overlap support area. Okay, but for this is a pullback resistance level. This is a overlap overlap resistance, not overlap support. Yeah. Okay, but overall our bias is still sell. So please adjust to the markets, and don't be so fixated. Usually try not to be so fixated as to where you should. Okay, if you decide on you want to sell here, but always react to the markets, right? Don't be more flexible and always adapt to the markets instead of being so fixated on these areas. Okay, so just a tip for you guys: always look out and adapt to the price, the current price. Okay, let me just take this out. Okay, all right, so that's for gold, and let's just take a look at oil. Okay, so for oil, let me just plot out the whole thing for you guys. So all right, previous resistance, just take this high right here. Okay, this area would be a resistance. Oh, price has actually reacted off the resistance already. So Juha, maybe if you were trading oil, there's potential for it to, oh, okay, I know where we should go with this. Okay, if you miss a sell entry right here, right, it's okay, because I can maybe find another sell entry which could help you trade oil. So let's just take a look at this. Lower levels, first support. So this could be our first resistance. Okay, let me just mark it out roughly. And second support. This could be our second support. Okay, maybe there's a expansion. Let me see. Second resistance. Okay, so what we're looking at, right? I can see that price has reached, you can see that price has reacted off here, right? So that's why there was a reaction right here, but it may just be a pullback to this first support area. Okay, so if you, let me just see, projection. Okay, yep, that's why you can see Fibonacci projection right here. That's why price has reacted off here, and just nicely, price closed below this 100% Fibonacci projection level. You can see how projections actually works pretty well, right? Because most of the pairs we use projections. So let's just take a look at where price may react to next. Oops. Let's just draw. Okay, all fibs. Yeah, it could actually react to this 38.2 retracement. Let's see, retracement level. Okay. And I think there was a 78.6 right at the body. Okay, no. Let's just use 38.2. Okay, so we can see this area where price may actually bounce off and then go higher. Okay, but if we look closely on the 15-minute time frame, right? Let me just zoom it in for you guys. You can see that there is a head and shoulders pattern, right? This shows that there is a chance for reversal. Okay, because you can see left shoulder, head, and right shoulder, right? So I'm pretty confident this is oil will actually fall and eventually break this support and fall maybe to the second support. Yep. So if anyone is trading oil, maybe this area is where you can maybe you can look for a sell opportunity again, because usually at the neckline, which is right here, we just take this out. Yep, for head and shoulders, right? If you want to wait for the retest, it will be at the neckline. So this could be a potential sell entry. So if you were to take a sell entry right here, right? Neckline, sell, stops, put it above the highs, above the head. So this is more reliable. And then your targets could be this pullback support area right here. Okay. So Juha, this is for oil, and I hope you will take the sell right here, because I think it's actually a pretty good sell. And yeah, so just my thoughts on oil itself. And then maybe if price were to come up to this, break this high, then it will actually come up to this expansion level. Yeah, so these are just levels you should watch out for. Okay. All right, so we've actually come to the end of our live training session, and I hope you guys have learned something new along the way, such as the different terms, and figure out that Fibonacci retracement levels and projection levels are actually useful in trading. And yeah, for all the pairs that I've gone through, I hope you guys have learned something and maybe find potential entries for the pairs. So all right, so thank you guys. Do tune in to the next live training session or any other webinars, and I'll see you guys next time. Otherwise, stay safe, trade safe, and take care. Okay, bye bye.